For someone who has seen their 401k grow, perhaps looking at their latest statement and seeing numbers they've never seen before, if you're close to retirement, you need to be doing some things now. We are approaching what we call financial winter.
.9, the Big Dawg, and WVLC.com. Every Saturday morning after the 9 o'clock news, we feature a program called Retirement Matters. Dale Smothers is the host of that broadcast program. He's been on now several years, every Saturday morning offering financial advice. And at least once a month, he stops by the Big Dawg and talks finances and things like that, stock market reports and trends and what's hot and what's not. And this morning, we'll welcome Mr. Dale Smothers to the broadcast. Mornings on Main here at the Big Dawg, and stock market's been cooking with gas lately.
Been doing well. Haven't
taken much issue with it lately.
That's exactly right, Larry. And honestly, with these high valuations, this poses an amazing opportunity for someone who has seen their 401k grow, perhaps looking at their latest statement and seeing numbers they've never seen before. If you're close to retirement, you need to be doing some things now. We are approaching what we call financial winter. So historically, August, September, and October are what we would consider financial winter. It's kind of a hit or miss as to whether it gets really, really cold, meaning the market does really, really poorly, or maybe it's a little bit of a milder winter and the market doesn't do as poorly, but it tends to pause almost every September and October. We see some sort of a pause, and it's already started. A little bit of a pullback this month, and a lot of that's been because of high valuations and buildup in technology. So technology has led us higher, and one of the things that we see is a lot of people who maybe think they're in safer investments still having a 8 or 9% rate of return year to date, and the S&P 500 has just done a 9% rate of return. So if you're looking at your statement, I'm going to give some real sound advice here, and it's pointed advice, because if you're seeing your statement and your year to date return is 9-10%, and you're close to retirement, let's say 5 years or less from retirement, you probably need to reevaluate the amount of risk that you're taking in that portfolio. If the S&P 500 is at, say, 10% year to date by the end of last month, and you're at 9, that means you're taking a pretty excessive amount of risk. It's not that we don't want you to return well, it's that we don't want you to be exposed. Warren Buffett says it best by saying, you don't know who's skinny dipping until the tide goes back, right? And this is where we don't really know how much risk we're taking in the portfolio until the market takes a nosedive. And we've got to reevaluate that in times like these when the markets are high. A little bit of inside baseball here, Larry, and this is just me and you talking here. I'm going to tell you that the financial industry is built to try and get your money to invest with them. They're hatching these products, these blended products. Typically in 401ks, they look like target date funds. And you might have a target date fund of 2025, let's say. And many people see these, a retirement 2025 fund, something of that nature. It's named something like that. And it's meant to say that the closer you get to the date that's in the target date fund, the safer the investment becomes. But what we're seeing in those target date funds is the fund managers are chasing returns, and the amount of safety you have in those funds sometimes can be much less than you anticipated. So with a small turn down in the market, you see your portfolio also shrink, and you're thinking, wait a minute, I'm supposed to be in something safe. So when we open the hood, we can really start to look at what you're holding in those accounts. And of course, we can help you do that. Any retirement specialist can help you dive into the hood, if you will, of your retirement accounts. If you have a 401k right now, it makes perfect sense for you to take a look at what you actually own in that 401k, and doing that with someone that's retirement focused, if you're less than 5 years away from retirement, becomes very wise, because now you can start to focus on the income phase, which we talk about every single week. If you are close to retirement, now is a perfect time to reevaluate. If you're far away from retirement, start looking for things that are going on sale right now. Palantir, one of the leading technology companies in the world, has recently seen almost 20% sell-off. We're in some historic sell-offs in some of these major names that have been bid up quite a bit, but it might be a good buying opportunity for you if you're farther away from retirement. Last warning, I'll tell you, I think that 401k right now is probably something that a lot of people are looking at and very, very excited about. And the last thing we want to do is go into financial winter without at least looking to see whether or not we need to put a jacket on before we head into September and October.
And you'll be talking about this Saturday morning.
We'll be talking about it Saturday morning. Yes, sir.
There he is, folks. Dale Smothers with R.D. Smothers Wealth Management, Main Street here in downtown Campbellsville. Retirement Matters every Saturday morning after the 9 o'clock news here at the Big Dawg.
Love to see you there.
Dale, have a great rest of the day today.
You too.
There
Thank you, Larry.
Dale Smothers.